Good evening, everybody. Today we're going to be talking through my two most commonly used candlestick patterns. These I use in my trading almost every single day. There's lots of different options that you can choose from in terms of candlestick patterns. These two consistently perform, and they give a real good indication as to what's actually happening in the market, which is, ultimately really, really important. I'm going to talk you through how they work, how you're going to use them, where you're going to use them, and ultimately how you can trade them to keep yourself really, really profitable. Just to find some space in the chart and we can go through them. Okay, so we've got two, like I said, we're going to discuss. Okay, we're going to discuss the engulfing pattern, okay, which is one of my go-to setups, and we are also going to discuss the wick rejection, okay, sometimes called a doji, okay, hanging man, those sort of things. But these two are the most commonly used candlestick patterns, I think, with a lot of traders, and they work really, really well, okay? Now, I'm going to do you a really crude drawing of them, okay? Basically, if you've got any kind of candle like that, okay, and in a bullish engulfing pattern, you have one larger candle where the body of that candle engulfs the entirety of the body of the previous candle, okay, we have ourselves an engulfing pattern, okay? That candle there has engulfed the candle to the left. Equally, if we were to look at a bearish version, okay, we have candle there, and we have this candle there engulfing, okay. This candle here is the engulfing pattern. I'm going to draw them out for you with squares instead of these sausage-looking things. But this ultimately is our engulfing pattern. Our entire body of the candle to the right has engulfed the candle to the left. This is a bearish engulfing pattern, okay? So this is ultimately what we're looking for. I'll talk you through exactly how we use them, okay, and what we're looking for when we're using them, okay? But this is kind of the theory behind them, is that price has enough orders in the market to create this pattern where it has exceeded the range of the candle before, which is then a really good indication that we're going to be going bearish in this instance and bullish in this instance, okay? Let me just get rid of these horrible sausages, and I'm going to put that one here, okay? Let's move that one across, just so we can see it clearer, and then this one here, move that one across, okay? So that's our bullish engulfing, and this is our bearish engulfing. Nice and simple, okay? Now, with a wick rejection, okay, is a little bit more complicated, okay? Not so much, okay? What we're looking for is we're looking for multiple candles, okay, and this could be, candles going down, then candles coming back up, okay, and we have multiple wicks coming out of them. So we have wicks like that, okay, and we have wicks like that. Okay, we have one there, and we've got one there, and we've got one there, here as well, okay. So in this example, what's ultimately happening is our wicks are rejecting a level, whatever that level may be. Okay, now this may be a liquidity area. This could be a supply or demand zone. This could be a support and resistance line. But what's key in these patterns is that the body of the candle isn't breaking past this level, whatever that level may be, okay? And equally in this example to the left, okay, we usually have these patterns again at areas of support or areas of resistance or supply and demand zones. There's various ways to use them, but they've got to be in key areas. You can't just generally just trade them however you want, okay? Equally, if we were looking at a bullish wick rejection, okay, it's very, very similar. I'm going to just copy these quickly. Okay, we're going to be taking these down here. Okay, so bullish wick rejection is identical, really. So what we've got is we've got long wick rejection there. Okay, we've got a shorter wick rejection there, maybe. It really doesn't matter. Okay, we've then got another long wick rejection here, and then we've got another wick rejection here. Okay, the important thing is, and there's no real kind of rhyme or reason around how long the wicks have to be. What we want to be seeing is that price isn't breaking past this level, and the bodies of the candles aren't breaking down any further. Okay, now this is a really good way for you to get into better entries. It's a really good signal for you to get into better entries. I'm going to show you a couple of examples of them and how we use them, and we'll go from there. Okay, so let's just pick some points on the chart. Okay, so we have here, as you can see, I'm going to leave that there. Okay, we have here, if we zoom in, an engulfing pattern. Now, what have we got here? So, in this area here, let's move these to the side just so we can see them there. Okay, we have an imbalance area. Okay, and this imbalance area is an area where we might look for rejection of some kind. So we mark on that imbalance. Okay, and what do we have? Prices come into this area. We have a couple of little wicks there, which is good, and then this candle here, you can see this candle here has engulfed that candle to the left. So very simply put, when that candle closes, if you wanted a really simple entry, you could enter like that, you could hold to the next low, that would give you a lovely 3R, or you could hold it to the next low, which might be a liquidity point to the left, which would be there, that would be 5R, and with this trade, actually a pretty decent trade, next liquidity low is here. That's an 11R trade. Simple entry, often in balance with an engulfing on the 2-hour time frame. It's got us into a really good entry. Now, what do we have here? After that sweep's been taken, okay, so we've taken out our profits here. Great little entry there. What do we have? We have some wick rejection. So we've found the level of support. Mark that on with this here. So this is the last body close like that. So this candle here, okay, this candle here was the lowest body close out of these. That's the last time we got support there. So that's held. We are an area of liquidity. We also have an imbalance in there, look there, like that. So we have an imbalance in there, okay, which we've tagged into. And we got supply zone down here. So this is actually a really good zone that we might be looking for a buy from. Okay, so we've seen price come into this zone. We have multiple wick rejections. 1, 2, 3, 4, 5, 6 wick rejections in there. That's a fantastic little entry. And let's say we took on the close of that one with a stop below the last wick, and then again very similar, we could hold it up to. So there we've got an imbalance here. Close of the imbalance like this. And you can see price came up to it, tagged the imbalance, almost filled all of that imbalance, and then came out of it. Another 2R out of the marketplace. Okay. Now this hasn't held all the way to the top, as you can see. What's happened is price has come down now. It's actually swept that level further. So that supply zone, that demand zone that we marked on has been swept further. And then ultimately, what have we had here? We've had an engulfing pattern. So we can set the trade like this. Okay, that white candle there has engulfed the smaller, both of those smaller orange candles there. We've got a liquidity point here. So we've held there to our first 2R. We've got another liquidity point here. We've held there. That's given us our 4R. And do we get that next one? No, we don't quite get the next one. So you probably would have, if you waited for that one, tried to come out a break even. But you can see, pretty simply, just by looking at some key areas where we might be looking for a trade to come out, and we pick this zone at random. I can go anywhere in the chart really. Let's just pick anywhere else. Okay, let's go up here. Let's see if we can find one in here. You can find these areas pretty much everywhere. Okay, so let's have a look, see if we've got any in here. Okay, so what do we got here? We've got an imbalance like that. Okay, we've got imbalance there. That has caused price to reject. Nice clean rejections, as you can see. We've got a liquidity point there. Price has come in. It has swept that liquidity point. Okay, come in, swept that liquidity point and broken down. Now, sometimes what will happen is you might not get the perfect pattern on the time frame that you're on. Sometimes what you've got to do is you've got to play around with the time frames a little bit. For example, if I go down to maybe the 30-minute time frame on this, what have we got? We've got wick rejection and an engulfing. So the area itself is really, really important, because I'm looking at this area for reversals, and we can discuss how we do that in another video. But ultimately what we've seen is by going down to the lower time frame, we've got wick rejection there, body doesn't go any higher, and we've got this engulfing pattern. So take that trade like that, stop above the high, hold down to first liquidity point, Yeah, we get that out there. Maybe hold down to that point to the left there. We get that out there. And if you held this even further, you've probably been stopped out for break even. But what do we have next? We've come in, we've taken out the high there that we've just created. We've got then another engulfing pattern here. We hold that like that. First liquidity point, second liquidity point, third liquidity point. Let's see if we get it. Let's go up time frame, just speed it up a little bit. Oh, there you go, perfect. Okay. So, you know, in a very short space of time, just using these simple patterns, we've got, you know, some pretty hefty profits out. And you can test this, you can see this all over the marketplace. So I just want to jump in, really quick video just to talk you through these two patterns. I'm using them all the time. Hopefully you can use them too. If you want any help or advice into how you use these, please just drop a message, pop me a like or a comment below on my Instagram at strongmoneyforex. Happy to answer any questions on anything that we discuss in the videos. Thank you.